Investors and traders, welcome to the channel Market Chart Pad, and today is 17th of May 2025. Hope everyone is having a fantastic day. So we'll take a look at the UnitedHealth Group stock. This stock has been in the news recently. Some sort of scandal broke out. That was the news headlines I read. So we'll actually take a look at this stock from a technical perspective, because this is what we do on the channel. We look at the news, but in our opinion, its news actually follows the price. So we'll just uncover the key patterns that were working in this stock, and where the price is now, and what we can expect, and what we should be watching for. All right. So as always, this video is for educational purposes only. It is not a financial advice. This is the monthly chart of the UnitedHealth Group. It's a really long-term chart, and the key low that I'm looking at is going way back during the financial crisis. In October of 2008. It's one of those stocks which actually bottomed, pretty much bottomed a little bit earlier than the actual market did, such as the S&P 500 bottomed in March of 2009. I believe the exact date was 9th of March 2009. I stay corrected. It could be 6th or 9th, but one of those dates, just from the memory, and when the actually stock market bottomed. But this stock actually bottomed before that, which meant that at that particular time in period, this stock was actually stronger than the market. And this is what we have exactly seen. We have seen this stock rise and rise and rise. And if we just look at it from its bottom right here till the COVID highs, it has risen by about, look at the percentage points. You can just have a look at, it's definitely more than the S&P 500 performance during this period, which lasted a little over 10 years, over a decade. Fantastic stock. And then ever since just the COVID, if we just take a look at this is the COVID lows. Marked as a CD leg. We just go up here. This stock was up about 240% as well, so pretty remarkable returns. And then also it gives a pretty nice dividend as well, and I can see that why long-term holders such as the mutual funds, the pension funds, they might be long-term holders of this the stock. And the way when the news broke out, the way the stock has fallen, we can just go back in the history and see when we have had seen serious pullbacks in the stock. So we'll just go back towards till the financial crisis. I'm not going to go back any further, because we just want to keep the recent history, from the financial crisis. So the stock has fallen. This is the monthly chart. In a few months' time, by about 60%, 61%. Now, one of the key things is, of course, it's in the news that since last month, the stock fell really sharply. But if you notice, the top had actually come in last year in November. So there was something going on, and I'll just discuss more from a pattern perspective, the kind of clues we had to be watching for, where the actual top came in. So before we discuss that, so this recent decline has been about 61%. And then if you look at this COVID decline, this was about nearly 40%, 38% to be precise. And then if we go back during the financial crisis region, going back, I think the stock topped a little earlier in comparison to the overall market, which topped around, depending upon the index, somewhere from July to October of 2007. The stock actually put in a high somewhere in 2006, and then, but if we just take the entire decline, it was about 77%. So it was a pretty serious decline over a number of months. And remember that during this time we had the Great Recession. However, during the current period, of course, there has been tensions due to the tariff situation, and the markets have been pretty volatile, especially during the month of April. But the systematic tension coming from the banking sector is just not there in the current environment in comparison to the great financial crisis, where the credit actually became a problem and the liquidity was a big problem. So it's another topic for another time. What are we looking at in terms of this long-term chart from a technical analysis perspective? As you know that we like to use the Fibonacci retracements and extensions and expansions, and what you're looking at is this big blue ABCD, which was completed, and the CD leg was actually 1.618 times the AB leg and right to the tick. So we knew that the price objective, which we would typically be watching for a CD leg extension, it was already hit, but we also had some timing coming in, and of course I'm doing it. It's not one of those stocks that we look on a weekly basis, so I'm doing this in a rear view mirror, so things are a little bit easier. But of course we are going to get forward guidance as well where the market is right now. So with that perspective, we had some key timing come in. That was in November of 2022, where we have seen the market actually just consolidate, go sideways. And then there was this last push up higher right into the 1.618 extension. Let me also put the 1.272. There you go. So the high which came in 2022, it was right at the 1.272, and then we had a one push higher, and then there was, if I can also draw the expansion of this trading range, which I'm not going to draw right now. So we had the price objective met, and then we had a key timing coming in the month of March of 2025, and because it's a monthly chart, we have to to hit exact precise timing, we have to take into consideration the error. So we have to give it 2 to 3 months on either side. But even if we give 3 months, we'll basically go to the beginning of the year. But what was the important thing to note is that the price actually was met by 1.618 times the AB leg, which meant that we have to watch the timing really carefully, because there is a chance that the timing might have come a little bit earlier. So whenever price meets time, the pattern is complete, and was the completed pattern on the chart. And we have seen several times that when we have a completed pattern, when the price has met the time, then there is a reversal, and that is usually a pretty strong reversal. And recently we saw that in the overall stock indices, 7th of April, coming in a pretty strong time and price combination. You just go back and watch those videos on the channel and you'll understand what I'm talking about. Especially if you're new to the channel, I highly recommend watching those older videos in the archive. Okay, so we have seen this really strong decline. An important thing is what the market is doing right now. So right where the market has closed on the weekly basis as of last week, it has closed right around the 291 spot 91. So let's just call it $292 per share level. Okay, now that is where we have a 78.6% retracement of this CD leg, coming in around 281, and then just below that, where in fact the pretty much the low came in, was around $248 per share level, and that is the 61.8% retracement all the way going back to 2008 low, which is a really significant low for the stock, and towards the all-time high reached on November of 2024. It was exact 61.8% retracement. Further, if we just look at this, just the way on the upside we have this ABCD, this move also basically unfolded in ABCD formation. Now we had a key monthly timing coming in on month of March, and if you just look at in April on the shorter time frames, you'll see that the market actually started to rally, and it came pretty much very close to the all-time highs. And this is again was a period from a timing perspective to be very careful, because the price had already met the objective and we had the key timing come in. So this was likely to be a more of a retracement, which it turned out to be. So it was just a recovery high. I was never able to make new all-time high, and boom, right in the 61.8% retracement. Right now there is one more level slightly below, which is the 78.6% retracement right here. Now, in the recent history, going back to about last 5 years, the only other stock that I have seen, or the one of the stocks that I like to follow, one of the major stocks has been Mark Zuckerberg's company called Facebook, now known as Meta. That stock actually retraced 78.6% retracement. And let me actually show you that, just to put things into perspective, that these levels are really, really strong levels. So here we go. This is the Meta stock, and this, when the market actually retraced, it retraced right into the 78.6% retracement of the IPO lows. So the IPO took place in 2012. The lows came in right here to the all-time highs reached in 2021, right to the 78.6% retracement of the AB leg, and then we have seen a really nice move higher. And these old subscribers will know that we were watching for 690 as our target. The market went a little bit higher, but on the monthly basis was not able to sustain that. And the right thing was to actually, when there was this completed pattern ABCD, to perhaps be out of the market again. And this is not a financial advice. Then it went right to the 38.2% retracement on the 7th of April low, then did an internal low again. Price refused to move lower, and we are seeing really nice recovery in Meta. I just wanted to point that out, that there is a possibility for this stock to be able to reach the 78.6% retracement. So UNH, I believe, was the ticker. Just trying to find the ticker. My apologies. United Health, yeah, there we go, UNH. Here we go. So this is what we are watching, right? So let's keep this in mind. But because we have this confluence, and given this is, look at this sharp move in such a short time period, hitting this really key level, we have to watch this entire zone of about $50, and the market is actually closing right into this. Month is not over yet, so we have to actually go to a little shorter time frame. So we move down to the weekly chart and see how the market is doing on the weekly basis. So this is the same pattern formation. I just highlighted ABCD like this to make things a little bit more clear, illustrated better. Market bounces from 61.8% retracement, still closing above this confluence level, which is good. But look at this. This market was down 23% for the week. So there is a lot of selling pressure into the market on the weekly chart. So we'll just have to, on weekly basis, keep on watching whether we're going to see some sort of recovery in this, where it just goes sideways. The selling pressure begins to reduce, and maybe the shorts they begin to get out of their positions, so they have to buy back the stock, and we begin to see short covering, and that will produce a pretty nice rally as well. And if we were to just go down to the daily chart and look what has happened over the course of last couple of days, you can see that this market has gone up a little bit, which is in percentage terms roughly around 17% roughly. And the important thing is that the look at these two candle formations looks a pretty strong candle. It was about 6.4%. So here the takeaway is that, of course, the stock has actually fallen really hard to the downside because of the news with regards to some sort of scandal, and also this is the company which had to go through some unfortunate scenario where one of the CEOs was actually shot by someone while he was in New York City, I believe. You can read about this on Google. But from a technical perspective, what I wanted to show to you guys was that we actually had reached a really key pattern completion right here, and we had the timing come in on the month of March. The market tried to make a recovery. Timing was too strong. The price already met the upside target we typically look for, so the price met time, and we saw a really drastic move to the downside. But right now it's into this zone, which could turn out to be a pretty good support zone. And if the market begins to take out the lows of last week. So let me go on to the weekly chart right here. In other words, the market begins to break below 240 $5 per share level, then most likely it's going to go to the 78.6% retracement. But here the important point I wanted to point out by giving you the example of Meta is that we have seen when Mark Zuckerberg just pivoted his strategy from metaverse into artificial intelligence, the investors' confidence came back into the stock again, and the stock has gone and made new all-time highs. So the stronger stocks, which have got if the management is good and is visionary and is able to pivot and listen to the investors, then investors will begin to go back into the stocks. We have seen this. It's been a really nice stock since 2009. We have seen the kind of returns it has given. So perhaps whatever is out there, once more investigation is done or some more news begins to come out, the chances are this stock could also recover. And where it is right now, how it closed the technical levels last Friday, we need to keep really close attention to it, because if it begins to consolidate right here, it could turn out to be a possibility of a pretty important low. And if this level is not held, which is a 61.8% retracement, then the next level we should be watching for is the 78.6% retracement, coming in around roughly $147 per share level. So this is what we'll be watching in the UnitedHealth Group stock, and I will try to update you next week about the stock, how the market traded with this stock, what sort of price action and price points we should be looking at from a pattern recognition perspectives. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.